Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for November 4th, 2018. Hope you guys and gals are having a great weekend. Before we get started, I've got to mention if you haven't tried ForexAnalytix, make sure you do so. It's only $1 for 10 days. All you have to do is click the sign up button right here. And once you do that, make sure you download the mobile application so this way you can have all of our analysis on the go. It's definitely a complimentary product to the platform, so download it at the Apple Store or the Google Play Store, and make sure you try us out. It's only $1 for 10 days. All right, now before I get into the analysis, I'm going to mention that on Monday there is going to be a special analysis during the FACE webinar for the upcoming midterm elections. We're going to look at how the FX market is setting up and what possible outcomes we can be looking for towards the midterm elections and how the US dollar is really going to respond to that. So make sure you tune in on Monday morning at 8 a.m. Eastern. We have the free FACE webinar. And if you don't have the link, make sure you follow us on Twitter to get that link to the webinar. Okay, now as I just mentioned, we do have the midterm elections on Tuesday. That's going to be pretty important. There's actually a lot of things that are happening this week in particular. We have the RBA decision, we have the RBNZ decision, we have the FOMC decision. So we have three central banks that are meeting. And matter of fact, the Antipodean currencies, the Aussie and the Kiwi, there's a lot of actual data that's coming out this weekend or this week as well. So really quick, let me just go over some of the key events that are happening. Oh, and we have a time change here in the US. So the daylight savings time shift is happening over the weekend. So make sure you're cognizant of that. It's been kind of a wonky week of or 2 weeks actually of time change because Europe had already changed to daylight savings. Now the US and Canada will be observing it as well. So we're going to go back to quote unquote normal, I guess. So for most of us, we're going to be back on our old schedule. It's just we're making our changes. So on Monday, all right, on Monday we'll have our services ISM being released Monday morning in the US. Monday evening or Tuesday morning, we're going to have the RBA decision. And by the way, the RBA is expected to keep rates unchanged. And if you look at the Aussie, and I'll actually go through the charts here as I talk about the economic data. The Aussie is broken out of a near-term channel. And any pullback that we see now towards 71.50 should be pretty well supported in the Aussie dollar. And the Aussie, the Aussie's been heavily and aggressively sold all of 2018. You can see this down channel that's really been in play, and we're outside of it now. So the Aussie looks better bid, and an improvement in risk appetite is going to obviously help the Aussie, which I'll talk about in a little bit. All right, and I really want to go over some of the charts in the Aussie yen in a bit, but I'm focusing right now on the Aussie US dollar, and you can see how the Aussie has popped out of this channel. One of the observations that I want to make here is the divergent relative strength as prices have been stabilizing. Okay, and as stocks had gone down, the Aussie stopped going down, and that was a risk for the Aussie dollar shorts, and we've been observing that for the last week and a half, actually a couple of weeks. And so it's we use the analogy, it's the beach ball underwater. As the beach ball has been trying to be pushed underwater, you get tired and eventually you let it go and it pops right out of water. That's exactly what happened with the Aussie this week. And the Aussie is probably going to be catching a bid, especially if risk appetite improves from here. All right, now going into Tuesday, we have Tuesday afternoon, which will be Wednesday. In New Zealand, we have New Zealand employment, okay, which is important. We have inflation expectations, and then on Wednesday afternoon or Thursday morning, we have the RBNZ that is also meeting, and the Kiwi, very similar type of situation to the Aussie. We popped out of this down channel, and it's been capturing the Kiwi to the downside since summer. And if you look at all of 2018, we've been moving lower, but now we've rallied outside of that down channel. When we broke above 65.80, 65.70, 65.80, that really started to squeeze the short. So any dips now back to 66 cents should be very well supported. The Kiwi looks good, and I'll talk about the New Zealand yen in a moment as well. Now on Thursday, okay, because we went into Wednesday night, the RBNZ, Thursday morning, or actually Thursday midday, sorry, we have the FOMC. Now there's no, it's only a statement, there's no press conference, and it's going to, everybody's expecting the Fed to keep rates unchanged. And matter of fact, with the stronger GDP, with the great labor reports, the jobs reports, we're not expecting the FOMC to make any material changes to their statements. So it should be a fairly benign FOMC on Thursday. And if you look at the dollar index, let's take a real quick look at the dollar index. You can see the dollar index, we had a big failure. And this was a pretty big deal in my opinion. We failed at the 97 level after slightly breaking out at month end. Okay, so month end flows kept that dollar very well supported. We pulled back, so now as long as we stay below 97 cents, the risk is lower from here. And remember, we're not expecting the Fed to raise rates. We are expecting them to raise rates in December. So we're not expecting any, real big changes to the FOMC. But the dollar does look vulnerable, especially if we take this uptrend line. If we break below 96, 95.80 in the dollar index, that's going to be a pretty bearish event for the dollar itself. And then on Friday we have UK GDP and preliminary GDP out of the UK. Matter of fact, we have. I was thinking, do we have US GDP? No, we don't. That's in a couple of weeks. So we have US producer prices at the end of the week on Friday, so that might be a mover as well. But what I wanted to do is I'm going to take you really quick through some of the charts that I have here on the S&P, and I want to pull out some something kind of specific. If you take a look at the S&P, and this is the ETN. This is from TradingView, which is basically a mirror image of the S&P futures. One thing I want to point out here is we actually rejected the 200-day moving average on Friday. You can see the rejection here, and kind of left us with a spinning top candlestick pattern. Let me get rid of this candlestick pattern in the S&P. But the improvement in the S&P it could continue, especially following the midterm elections. If well, I don't want to get too deep into it, not for this particular webinar, but if risk improvement, let's just say if risk improvement improves, especially after Tuesday, and we break above the 200-day moving average, I think the risk is that the S&P pushes up towards the 618 or the 2800, 2813 would be the level here, maybe 2810. I think I actually moved that just slightly. That fib level, but the 618 is going to be important for the S&P on any type of bounce. You can see there's a lot of resistance coming through here, as far as resistance zone, if you will. You can look at it kind of like this. Aside from the 618, there's going to be a lot of overhead resistance as we head up here. But the improvement that we might see in is some of these yen pairs. Take a look at the dollar yen. The dollar yen has held this uptrend line. We had a false breakdown. You can see the false breakdown right here, and that could lead to a double. Let me remove the magnet. That could give us a double bottom, if you will. You can see a double bottom, which could lead us to a move towards approximately 114 and some change. Now there is a 618 retracement here at 113.35 that has held us. It held us last week, and we retested or got close to on Monday, or on Monday, excuse me, on Friday. And so a break above 113.36 is going to be a pretty bullish event for the dollar yen, and probably risk appetite as well. Now, the reason why I point this out is because I want to show you the Aussie yen and the New Zealand yen, because again, we have the RBNZ and the RBA both meeting this week. You can see the Aussie yen. We've had this like nice little downtrend. 618 retracement as well comes in around 82 yen. Well, it's 82 yen is the channel resistance, but the 618 comes in at 82 and a quarter. So really a good solid breakout above 82 in the Aussie yen is not only Aussie positive, but it's probably going to be risk appetite positive. That means the S&P is probably moving up at the same time if the Aussie breaks higher. Same thing with the New Zealand yen. Take a look at the New Zealand yen. We have a quadruple bottom. Yeah, when's the last time you've seen you see double bottoms all the time, or double tops, triple bottoms, quadruple bottom, and really a breakout above this resistance here at 75.67 is going to be huge. I'm already playing it to the long side, but yeah, I'm just going to tell you right now, if we break above, we already broke this channel resistance. If we break above 75.60, 75.50, that's going to be huge. Now, you'll notice this blue line right that comes right through here. This is significant. Why? Go to a weekly chart. This was a long-term, okay, breakdown point. Notice, and this is, you can see we spent several months below this trend line. If we break back above that trend line, we could probably trade back up towards 79 or 80 yen. We're trading at 70, roughly 75.50. So that could be a big move for the Kiwi yen higher. A lot of traders are short. A lot of people are short the Kiwi. We could really see that squeeze higher. Again, if risk appetite improves going into next week. So there are a lot of things happening in the FX market. There's a lot of things happening this week. Oh, one last thing I do want to make mention is gold. Gold has been, it's been held up at the 38% retracement, or the previous support from back in December of 2017. It's 38% retracement, all the same level, comes in around 1240. Gold looked like it was rolling over again, then we squeezed back higher on Thursday, Friday. If gold breaks out above 1240, you see the Aussie breakout higher, the Kiwi breakout higher, risk appetite breakout higher. It's all brewing. Now, things could dramatically change following the midterm election results, which would be Tuesday night. For some states, it might be really late Tuesday night, Wednesday morning, depending on where you're at. So we're going to pay very close attention to price action going into Tuesday/Wednesday. It's going to be a very interesting week, but I think there's a lot set up for next week, a lot of potential in this market. And so if you're an FX trader, I know it's been probably a pretty challenging month. Correlations haven't really been too tight. The FX market has been kind of benign, relative to the S&P. To the S&P moves, but I'm thinking after the midterm elections we might see a lot of activity in the currency market. So keep a real close eye out for some heightened volatility in the FX market. And guys and gals, if you enjoyed this video, this week ahead video, make sure you hit the thumbs up button. That if you're watching us on YouTube, and subscribe to our YouTube channel, so this way you get to all of our, check this out, all of our great webinars. If you want to go back and look at some of the past interviews, you can find it directly on our website. You just click on the link here where it says webinars, and then you have your past interviews, you have your future scheduled interviews. You can see who's coming up and what the date is. We got a lot of great, you can see Mark Newton, he's always awesome to watch on CNBC. Peter Bachvar, he's awesome as well. And when we have interviews with these these traders, these professionals in the industry. You get them for not a five minute sound bit like you would see on CNBC. We have great interviews that last for 20, 30, 40 minutes for some of these professionals. So you can see who's coming up, and then you can go to the playlist and find out. Excuse me. Sorry about that. Some of the past recordings, if you miss anything because you were out and about and you couldn't listen to us live. So guys and gals, my name is Blake Morrow. I'm with ForexAnalytix. Make sure you try us out. It's only $1 for 10 days. And thanks again for listening in.